It was good, Ewe gang. Hope everybody feeling good on this Tuesday. I think that's what the day is. Yeah, on this Tuesday. Um, yeah, today is webinar day. I finally decided, if you've seen from the title, that this webinar is going to be on the basics. I think that's what I said. Yeah, the basics. So, um, we'll get to it after we finish our correlations and everything, and then we'll be able to see what we have going on. So, without further ado, let's go ahead and let me go ahead and share my screen. Share my screen. And let's get to these numbers. There's just a few things I want to run through as far as basics go that I think will tie into some. By the time we get to the webinar, I know what I want to say, what I want to do, and how I want to move. So let's get started without further ado. All right. So who held below the line? This right here would have been a start. So Aussie's weak. CAD is strong. Somewhat. Aussie's weak. Swiss franc is strong. Euro strong. Aussie's weak. Pound is strong. Aussie's weak. Aussie's weak. Yen is strong. Aussie's weak. New Zealand is strong. Aussie's weak. US dollar is strong. So we got a -7 Aussie. And from yesterday's correlation, we have it down 6. You mean for the whole year? Like all 2023? I mean, the answer is yeah, either way, but are you asking about all 2023? So CAD is weak. Swiss franc is strong. Euro strong. CAD is weak. Yeah, so you can definitely forecast for the whole 2023 year, and I'll show you how. Matter of fact, I think we can just do the webinar on that since we're talking about the basics. We'll do how to set up a yearly forecast of what the markets are going to look like. Still the same thing. I just pretty much showing you how to do it. So yeah, once we knock this out, that's what the webinar will be about, on the basics. But we'll see how we can forecast for a full year. So what's this? Euro strong, CAD is weak. Pound is weak, CAD is strong. Wait, hold on. Yeah. Stay below it. And this was who sold. Didn't take it out yet. So pound is weak, CAD is strong. CAD is strong, yen is weak. New Zealand is strong, CAD is weak. US dollar is strong, CAD is weak. CAD is -1. It went up 2 from yesterday. Euro strong, Swiss franc is weak. Pound is weak. Swiss franc is strong. Swiss franc is strong. Yen is weak. New Zealand is strong. Swiss franc is weak. US dollar is strong. Swiss franc is weak. Got a +1 Swiss franc, no change from yesterday. Euro is strong. Pound is weak. Euro strong. Yen is weak. We're holding above that line, so Euro strong. New Zealand is weak. Euro strong. US dollar is weak. Got a +7 euro. It's gone up 4 from yesterday. So this lets me know I'm going to stay in this Euro CAD trade that I'm in, because it still shows signs of going up. Pound is strong. Yen is weak. Pound is weak. New Zealand is strong. Pound is weak. US dollar is strong. We have -3 pound. It's going down 8 from yesterday. New Zealand is weak. No. New Zealand is strong. Yen is weak. Sorry. US dollar is strong. Yen is weak. Got a -5 yen. No change from yesterday. See, like I thought this was going to happen from the analysis. It didn't move at all. because they were completely opposite. So New Zealand is weak. US dollar is strong. Interchanging, changing directions. So we have a +3 New Zealand and a +5 US dollar. New Zealand went down 4. US dollar went up 12. All right. So as we rank these, we have Euro at +7. We have US dollar at +5. We have New Zealand at +3. We have Swiss franc at +1. CAD at -1. Pound at -3. Yen at -5. Aussie at -7. All right. Let's get our indices and stuff done. Okay, so we clearly see sellers still control this right here. Up until this point, it's not until we go through here that the buyers control this. So Dow Jones is weak. New Zealand is strong. I mean, the NASDAQ is strong because we're here now. And then it started selling from up here. So S&P is also weak. And that's going in for the day tomorrow. But we're getting a lot of turns, so we'll see some Bitcoin strong, Litecoin strong, Ethereum strong, Doge is strong. Those are pretty obvious. We don't need to do much with that. Like I said, I'm currently in a Euro CAD still. If you've seen from the EWE, I'm in this Euro CAD for a buy. I got in down here. So far as here, I wanted to exit up here. We'll see how it plays out. If there's another one that could be ready for me within the next hour and a half, 2 hours, we'll go with that. But today's webinar is going to be about the basics. So when we consider the basics are, if you don't have the basics, the rest of the fundamental stuff is not going to make sense. So if you don't know what a candle is, you don't know the standard basics of a chart. Got you. Okay, yeah, we'll definitely look at that. That's a smart idea too. I'm glad you brought that up. So that'll definitely flow into what we're doing with the basics, but we'll just do it basics and make it stock related. As far as how quarterly reports do. But yeah, we're gonna break it down the full way. I'm gonna break it down for the year, by the quarters and the months and all of that. So it'll turn into a whole webinar. So with the what was I just saying? The heck I really drew, but the basics. So with the basics, we know that we have candles. We know that we have, the charts as a whole, just different fundamental things. But the basics is everything. When we're looking at what we do as far as charting materials, you got to understand the candle. You got to understand you got to basically understand the candle, the worlds within the candles, the universes above, universes below, and everything in between. Today's webinar, we're going to be breaking down the whole year 2023. We're going to break it down into segments. We're going to start off with the whole year. And just like with that's why the basics is important. Using the candles is important too. Because just like with the candles, what we have to do is we have to use the candle from the day before, break that down, then use the candles a couple of days back, couple, candles back, so we can, do the two candle slide. I think that's what we're gonna call that now, the two candle slide. And then we'll see exactly, not exactly, but get a gauge of what's gonna happen. Um, this way we can look at the full, we're going to look at the full currency, the US dollar as a whole. We're going to look at the stocks, indices, and then we're going to see if we can find anything as far as stocks go for what we could expect for the year, the next 2 months, 3 months, half a year, all of that. So we can see exactly, not exactly, but roughly where we're going to be at, how the trend is going to move, where we need to pivot, where we need to get in, where we need to get out, and different points like that. So without further ado, I'm going to share my screen. We're going to start with the candle while simultaneously breaking down the year. All right. So there's my screen. All right. And let's put this in indices. Just so I'm not confused as far as my trading goes, I'm going to use my monthly setup. All right. So from the basics perspective, the purpose that we use charts for is to see what the market is planning to do, what the market is currently doing and is planning to do, and in a sense has done, because all of this information, it's important, right? It tells us where we need to go, where we need to be, if we need to be moving a certain way. So when we're breaking down our currencies, if we're doing a day trade, right, we know that we're going to use daily 1 hour, but we know that everything that we're doing is basing off of that daily, right? Or that full 24-hour pocket that we're going to be a part of, right? So the same stands to reason when we're looking at a year, right? If we're looking at a year, we're looking at a month, whatever it is. We're trying to see what's supposed to happen within the forecasted month, or the month that's coming, or the year that's coming, or the next candle that's going to be, coming. That's basically what we're doing, right? We're anticipating moving with the larger players, and the larger players continue to go in that same direction. So when it comes to the yearly, we're not going to make any deviations from change. We know that we're always using 3 time frames. So if we're going to break down the yearly, what would that be? We have to use the yearly, monthly, weekly. That's set up, right? So we'll take the monthly out and we'll use the yearly and we'll use the weekly, right? So if we're using a weekly, that'll be on this side. We'll put the W in that one for 1 week. Okay. And then we have the yearly. So yearly, I'm not sure if your charting software has it or not. It should. I think all trading views go up to the years. I think it's these small ranges that change, but the yearly will be 12 months, basically. So if you would either see 1Y, and if you don't see 1Y, you should see 12M. So we'll open this chart on 12 months. Right. So this, for example, is the New Zealand US dollar. So this doesn't go back like the other ones do because we're on a much larger time frame. So this area that's blank is not because there's no data per se, but because TradingView had not been invented yet. Nobody had made TradingView. So TradingView came out around 2006, 2007. Well, yeah, around 2006-ish, somewhere around there. And that's when the charting software really started to boom. All right, so it's been for a minute, but doesn't change anything. We still follow the same rules, right? So if we're looking at the stocks, right, first thing we want to do is look for the year, right? If we're going to forecast the whole 2023, we're going to anticipate what the US dollar is going to be doing, right? So, my bad, I got to get some paper just so I can stay coherent with all of this. Because, like I said, this goes into the basics of everything we do as well. All right. So, Aussie, CAD, Swiss franc, Euro, Pound, JPY, New Zealand, USD for the year. All right. So we know that we always need the dollar first, right? So the first thing is when we compare, according to the daily, everything's still going to basically remain the same thing, right? So we know for the year, right, we have Aussie selling, and it's like, so this is the separating line that we know the breach happened, the wall happened. And so we know the movement that made it through was this wick right here, and we can see it on that candle. So we know that this is our start, right? So this is where everything started from. So this is telling us that the US dollar is still strong, right? So against the Aussie, US dollar is strong, Aussie's weak because it's pushing it down. All right. Now we're in a pullback phase. Don't get me wrong. We're in a pullback phase, as we can clearly see. So we know that there's going to be a decent amount of time before things happen. So we're going to see a change according to the weekly, right? But we have to remember the correlation numbers of where we are. We look at the Aussie, the US dollar against the CAD. All right, we see it start there between those two. And so this was the start right here. All right, so we have a strong US dollar against the weak CAD. Same thing here. We went through. So the movement that actually went through and held is going to be this area right here. We can clearly see it bouncing back. But either way, US dollar is strong, Swiss franc is weak. Okay, so we broke through here. So this would have been the start for that one. Euro's weak, US dollar strong. Broke through there. This is who went through the line. So pound is weak, US dollar is strong. US dollar is strong, yen is weak. Still got to sell here. New Zealand is weak. US dollar is strong. So we know for the year, we're dealing with a +7 correlation strength, right, for the US dollar, right, for the last, between the last couple months, right? But we also know that we have to base it off of going back to, right, the two candle shuffle, right, two candle slide. So we go back two candles, this is where we're starting from. This is why we see it reacting here, right? But all in all, we know ultimately that a US dollar sitting at a +7. So for the same setup, the yearly, weekly, we also have to look at our indices, right? So what is Dow Jones telling us right now? Right. Dow Jones is telling us that it is selling, right? This is where they're talking about the bubble hit, recession, and all this other stuff, because the bubble finally got busted, right? It got busted up here. So for the year, Dow Jones is still selling, right? For the year, Dow Jones is weak. Same with the NASDAQ, it's weak. Same with the S&P. Wow, so all of these are showing weakness for the year. Now, yearly time frames kick in a lot slower. So this isn't something that you want to dwell on too much. You think that you have to sit and watch this in this capacity so much. You feel what I'm saying? What you want to do is sit and watch how it plays out in the wares, right? So we know we have S&P, Dow Jones, and NASDAQ for the yearly correlation showing it's weak, right? We have US dollar showing that it's strong at a +7 for the yearly correlation. So what we have to do is see what we're doing for the next year. So within the next year, this is the pocket that we're going to be dealing with, right? So this is the start, right? Because remember, on our third time frame, we can just use the weekly. So if the start is here, we see that it kept trying and bounced through here. Finally, we have our end. This is the pocket that we're moving for, the S&P, right? This is our pocket for the NASDAQ. And it's our pocket for Dow Jones, right? So what we're seeing right now is a rally up, is really a pullback. All right. So for the week, we're going to see a pullback. There's going to be, so I don't know if y'all are watching the news heavy or not right now, but you see the news talk about there's a coming recession or another recession is going to happen, right? We know from the EWE that recessions are pullbacks, big pullbacks for bigger time frames. So it's not coming anytime soon. Don't get me wrong, because these are weeks. Like this is 1 full week. So by the time it comes back up somewhere up here, the seller's going to kick in. But we got enough time to move for the buyers, right? So with this being said, right, knowing what pockets we're in across the board, where we have our NASDAQ, our Dow Jones pocket, sellers control this. We have NASDAQ pocket, sellers control this. S&P pocket, sellers control this with the strong US dollar. Good point. We're at the bottom. So even though we're at the bottom of these, we're not ended yet. We would have to wait until next year, right? This is what's going to be crazy. We have to wait till next year to see if this is going to be a closed candle that shows the buyers are coming back or if it's going to continue on the sell. At this moment, we know selling has to continue, right? We just need a better pullback. So when we're looking at whatever stock it is that we're looking for, right, we have to remember these key points, right? So for the year, a seller, so this is what's important, right? For the year, a seller can kick in at any given time, right? So this is what we're going to keep in mind. There's two important points to this. We know that a seller can kick in at any given time based off the yearly forecast. So this lets us know that we can be buyers because now we're going to have sellers to kick in. Our question is, where are the sellers going to be? So far, we know that according to the weekly chart, our larger player is here. This is where the person is selling from. So we don't really have much to worry about as far as S&P goes until it comes to 4810, right? When it comes to the NASDAQ, we don't have much to worry about until 7133, right? And then S&P, we won't have any. So wait, what did I just look at? Dow Jones, S&P. Oh, S&P is 4810. Dow Jones then is, we don't have anything to worry about until it comes to 36,910. Now, considering where we are right now, Dow Jones, we're at 33,704. NASDAQ, we're at 6254. S&P, we're far away. We're at 3919. So we know that as far as our year goes, we need 2 points. So if we were looking at this like a trade, right? What do we know? We have the start, the wall. We don't necessarily have the end yet. We can't say, but we know where our wall is. So we know we need at least to pull back up to here before we can even consider selling, right? Because we need a pullback to come to the wall first, then ultimately come to the challenge the start, right? So with that being said, here is where a lot of counter trading can happen. We could make counter trends knowing that it has to come over here, but we need significant important data to show us that a buy is going to happen down here, right? The reason why I'm saying that is because a sell can also happen down here with it trending like this and this being a running candle, right? At any given moment, it can pull back up here and then completely eclipse and drop down. So this is what you want to keep your eye out for by the months, right? It's not going to make that crazy major drop anytime soon, but when you keep your eye out on the month, you'll be good. So we know that we're in selling pockets. We know who's controlling the market, but now we have to worry about the direction. At this direction right now, we're seeing the buyers come back in because we now know that our midway point is always going to be the monthly, right? Which goes into where we are right now. So when we look at the monthly, we know from the monthly they're buying right now. We see where they're trying to buy to and meet up with the sellers. So the recession could be coming in soon, coming back in because the US dollar is still strong. It's just waiting on its turn. But because the volume is so big that it has to change. So let's take this same information and apply it to real stocks and break them down the same way, right? Because it's going to be, hold on, before we do that, I do want to adjust this part too. So now this is us breaking it down for the year, right? We know that we have 1 year, right? So now there's 12 full months. So now if we want to see what it's gonna be like for the quarters, right? What we'll do is we'll put it in monthly, of course, monthly, daily. That'll be our 3. But all you have to do is count the months, right? So we have January, right? So February, March, April, May. Where's my vertical line? I got one somewhere. All right, so this is December and January. Somewhere around here. All right, so we got one there, right? So that's first quarter, right? So we got December to January. Second quarter is what, after March? So January, February, March. So we'll say that one goes after March, between March and April. So that'll be somewhere here. All right, that's, so this quarter 1, this quarter 2. I don't think it's gonna let me go out that far. So April. So between July and August should be the next quarter. And then see 1, 2, and then the last one would be, what is it? August through, wait, no, that's off. Because it should be like, or July to October. That's what I think it is. I think that looks more sensible. Yeah, now they look about closer. And then October after September. All right. All right. So here's what we're dealing with right now. This is how we're going to break this down by the quarters, right? So let me write this down. So we have first quarter, which is January to April. Second quarter, April to July. Third quarter, July to October. Fourth quarter, October to December to January, right? So we can pretty much, we don't know exactly what's going to happen, right? But we know several things for sure, right? We can look and say, okay, for first quarter, we can anticipate buyers still controlling the market, right? But we can also anticipate sellers kicking in, because now remember, our yearly correlation shows that the US dollar is strong and the stocks and indices and everything is weak. And that's why we're here, right? This movement here is a running candle, right? So all of this from here to here is the last year, right? We can only base things off the previous year and anticipate what the newer year is going to give us, right? So if that's all of the data that we have off rip, we can anticipate that, one, with this candle still being open and we don't have an end yet, sellers can kick in first. So the first point of our yearly forecast and approach is that this is a high, or this is a low, but it's not an end, right? We know that it's not an end, right? Based off of, that's daily. This is yearly. All right. So we know that this is not the end based off the fact that this candle right here is a wick, I am not deleting that to draw all this stuff back. All right, I'll do it real quick. All right, so we see that this wick right here is still just, this candle is still just the wick, and this is a running candle, and it has not closed. We need this candle to close to know which direction we're going to be in. So right now is where the forecasting comes in, right? So knowing that, as far as the year goes, right? Knowing that we know that a yearly seller is going to kick in at some point, right? We can mark the potential money memory banks that this could hit, right? So we can hit, they can sell somewhere around here. We clearly see they try to sell here and it didn't work, try to sell here and it didn't work. So this is not where the sellers are, right? These points are not where the sellers are. So this means that we can buy through here, because when a seller's kicked in here, they send the price down, but the buyers came back in. When the sellers kick back in here, this is as far as they went and the buyers came back in, right? Now, again, this is for the year. So now, as we're forecasting this for the first quarter just for Dow Jones alone, and relatively, this is going to be the same juxtaposition for NASDAQ, S&P as well. Simply because as we look at them, they pretty much have a very similar setup. We just have to put the same time frames between them, right? But because Dow Jones has already broken down, what we can anticipate for the first quarter is buy power, right? We can anticipate that for the first 3 months, there's going to be buy control. So you'll be wanting to buy and invest in stocks. Now, we're not worried about this area here. We're not worried about this area here, but our area of importance for the first point is here. So we have this point, right? And then we have this point, these 2 points, right? So within first quarter, we want to see how it comes up to this point. If it goes straight through this point with a lot of power, we're going to let it keep going, right? But we know that it has to come up here. So considering where we are, 2 things can happen, right? When it comes through the first quarter could be so powerful that it changes the direction. And in changing the direction, as we see here with this wick right here coming up and it showing that we're getting probes right here, this could very well be a market turn to where this is the start and it changes direction. And now Dow Jones, S&P, all of these are going to be strong for a long period of time. Or it could be that they just come up high enough to level out and turn around. So we got to keep 2 points in mind. We know the sellers control the market. They didn't kick in here and they didn't kick in here, right? As we're pulling back. So our next points of importance are here. These are memory banks, and this is a memory bank. So our forecast for the first quarter is buy, right? And if you look on any of your like your softwares and all of that other good stuff that they got, that they tell you, it's like, okay, going in the first quarter, they're starting to tell you to buy stocks. It's already written here because we're now getting a pullback that is coming here, but we cannot immediately say that we're going to buy forever, right? So now, considering where we are, first quarter, we're anticipating buys, right? Already because of the price that we're in, and we know where the sellers have to kick in at, and we know what our correlation numbers are for the year, right? So now we'll be able to ride the waves up here. Second quarter, depending on where this is, if it's below this line, we got to challenge this area here. So profits are going to go up a little more, but we have to see how it holds, right? So if it does this for first quarter and then holds like that and then comes down, the buys are going to continue, right? Because it held right here. Now it's just pulling back to get a better price and it's now reacting. Now, if we can get the first quarter and the second quarter to hold up above these, we know the buys are going to continue, right? But now if we can't, we know that the sales are going to start to happen. So when it comes up to this price, we have to see what it does. When it comes back up here, if it goes like this and holds and it starts to drop, now we have a lot of time, right? So considering how this first quarter is going to go, we can say, all right, will we continue up with the buys? As of right now, we're pretty much in a good position to be buying anything, to be buying everything, to be honest with you. So now let's take this same information, right, and apply it to an actual stock. Y'all should. All right, I should be back. I should be back. Sorry about that. My Wi-Fi cut out. So we should be back. All right, yeah. So you didn't miss anything. It cut out and now we back in. All right. So when we look at something like Apple, right? Same thing. We got to go back to the yearly. And this is how we can assume that, okay, bet they're still going to be selling this because we know where the sale started based off the two candles. And we see where it started at from here. So we know as far as Apple goes, this is what we're dealing with. That's the start. That's the wall, right? And so far, this isn't the end, right? Because we see that this is still open, right? But this is a low. This candle could be bouncing back. So now, when we look at the NASDAQ, because Apple is in NASDAQ, right? And we broke it down based off of the quarters. We know for first quarter, according to NASDAQ, right? Buying still has to happen. We have enough room for the buyers to continue up. So we see that we're clearly in a pullback, right? And we're getting the low, the high, the low, the high. So we clearly have a higher high, higher low sequence. So buyers are kicking in here. This Apple is a NASDAQ stock, right? So now when we see where we are, but this is why I always said the index happens first and then the stocks in the index start to move next. So where we have that whole movement already happen, it's slightly off from NASDAQ, right? Certain pieces have already moved as far as the NASDAQ goes. So right now, at this particular point, we know that the yearly wants to sell. So where are our yearly selling points at, right? We know for a fact we have one here. This is the start, right? We went through the wall. This is another point of significance because it has a major movement here. Here's another one, right? And here's another one, right? So our first one that we want to go through, right? Let me put this back on monthly just so we can see it as a trade. It's trade setups. All right. So as we're watching this from the daily, we see all of our important points, right? We see the sale happen, boom, came up, boom, boom, boom. Now, here is an important piece. Apple now will be the best place to buy at because we're reacting from this point here and we're at this bottom piece. And we know, according to the correlation in the daily, right, we know that everywhere here we have seller's control. So with that being said, if we were to take a counter trend here and to buy in on Apple, we could run it up to here and get out. We wouldn't want to run and try to challenge it here because that's very risky, right? It's very risky considering where the sellers are, right? We know that we're currently here. We know that the sellers here, which is pretty much right at the line of the wall. We have sellers above the wall. We have another set of sellers above the wall. And then we have the ultimate sellers way up here. So the buys can work, but we have to keep in mind all of these points right here. So we're forecasting for Apple. Let's say we're trying to invest in Apple right now, and we see the full position that we are. Mind you that keep in mind that this is not the end. I know I marked it here, but this is not the end simply because when we're looking on the the 12 month. When we're looking on the 12-month, this candle is still open, and this doesn't have two candles back to back that show us open and a close. So we can't call that. Now, this could be turning, which I'm pretty much looking at right now, seeing that it is pretty strong and turning. So with Apple, right, this investment could run up here first, right? And that first quarter run can get you from here to here. Possibly quicker, but this is potentially going to be that first quarter run because remember how we broke it down? Our first quarter move would have been somewhere around here. So around this area right here is where the first quarter is going to come in. Now, because we know we have second and third quarters as well, we know that we still have room to go up. So buyers still have potential to keep going, but we're going to gauge it because this is NASDAQ. We're going to gauge it off of whether the NASDAQ is in it or not too, because even though we see that the movements are coming up, we see how the NASDAQ is starting to approach this area here, right? And with all of the power that it's starting to have, with the end now we see the pullback starting, we're going to see how it's challenging this area. Okay. And how NASDAQ moves, then we apply it to our other stocks. So let's try another one. I want to use, let me see, I want to look at Hexo, but I don't because I don't think Hexo has enough data for this. It doesn't. Well, does it? Kind of, sort of. So this would be the open candle. Hexo is still selling. So as we clearly see, they're getting rid of Hexo, right? The yearly people, right? And this is supposed to be on weekly anyway. So it could be 3. All right. So we see where they're getting rid of Hexo at, right? Now, the thing with Hexo, though, is that it started selling heavily from here, right? So when we look here, we see, okay, that's where the sellers start. We're way down here. But the difficult part about reading this is because the data is so small, you can barely gauge where your exit points are, where your first couple points are, because we don't have an end yet. We just have a start and we have a wall, right? So now that we're getting the end, now we know roughly about where, with time, we can take our investments with Hexo, right? Because for one, we know that it can't sell forever. So, right, buying here, our first point of interest will be somewhere around here, right? That'll be our first. And of course, this will be our second, and this will be our final, right? As far as where sellers are set at and where they're dropping the market down, right? So, our forecast for first quarter, again, we can run and try to attempt to get this line here, but this right here might be the first and more realistic area to get considering the price, because it's at 109 now. I say coming up to about $12 would probably be the best, but that'll be, like I said, the first quarter, second quarter ish time pockets, right? But we're basing this off of the full year. That's saying that selling is still continuing. So we know we have sellers jumping into the market, dumping stuff, but now we just have to wait for that to pull up. And like I said, Hexo doesn't have much data for, it's only been stock for since 2018 or 17. So it's not that much historical data. Um McDonald's, maybe. And McDonald's is US stock exchange, so that's gonna follow Dow Jones. Okay, so McDonald's probably already turned, but let's check this out. No, McDonald's is back at the top and it is about to sell again. So this right here is the high for that. Oh, it's actually still at the top. Okay. So with this still being at the top, this sale might happen. And once it gets here, it's going to drop down. So McDonald's, there might not be no point in buying this if you're buying it. Um, I know you're probably not, but I'm using this for the example, right? Because you do still have the capacity to run it up to here, right? So it can still give you a good 5%, based off of this. But now you would know that you can't do anything with this. And now it's time to start preparing. Even if you see it from here, the trend is dying, right? So once it comes up to here, the sellers are starting to kick back in. So when the sellers kick in, at this point, you'll be able to put call put options. Like if it comes up here, you'll be able to buy this as a put option, considering that it's still high. The reason why I'm saying that is because we know that every other piece, like let's say Dow Jones, Dow Jones is closer here, but we know it has to come back down and challenge here. So if we go back to the McDonald's, being that it's up here on a running candle, we can anticipate that it's going to sell back down here. So if we go back our 2 slides, because if this was our running candle, we have to use these 2. So if this is our running candle, we have to use these 2. So from here, this is what we're dealing with, right? If the sell is on, right, we're ultimately going to be challenging and trying to come back down to challenge this price here. So with McDonald's being at the top here, if we were in a hypothetical situation with the US dollar already at +7, we might be at a point where that sale is going to happen, because we know that this right here is the first place where the sellers want to be at, and we don't have a second yet. But we know that ultimately we'll be coming down to here. So from quarter one, I can already tell you this is going to likely probe out and then come back down, right? And then when we go into quarter two, it's probably going to be selling as well. So for these, you can't do anything but options. Put options to sell. There will be no buying as far as McDonald's goes. And this is a Dow Jones thing. So ultimately, that's pretty much all I can show regarding that, breaking it down, and breaking it down by the quarters. But yeah, that's pretty much it. That's pretty much all there is to it. You start with your 12 months in your year, you see what your last year was about, and if your last year's still selling, chances are you want to go with that, but you want to use your weekly to see if your markets are turning or how they're looking. So when you bring these two together, then everything that's going on. You want to section it off by 3-month intervals to see what the quarters are going to be. And then you can anticipate what the quarters are going to be or could potentially be based off of breaking down where that year was. So as we've seen with the NASDAQ, Dow Jones, and S&P, we've seen the full year's pocket hasn't been fully defined yet because we don't have an end, but we have a start in the wall, which means that we're still working towards getting the end, right? So that means either the end is going to be made either way, the end is going to be made at the end of this year. But what can we do in between time? That's how we'll gauge the quarters. Knowing that sellers are still controlling this and we don't have an end, we can pretty much do counter trends, and then we can start to anticipate when will the sellers kick in. So once we find where the memory banks are and knowing that the sellers kick in, we can use that to see how quarter one is going to play out, how quarter two is going to play out, how quarter three is going to play out, even into next year. You feel what I'm saying? So that way now, when we're not doing Forex and we're doing stocks, we're looking at stocks probably every month and a half, because now we're able to leverage it by the quarters and get in and get out and ride the waves that we're on. Same thing with crypto. It's going to give you the same energy with that. Crypto is just 24 hours and it's a lot newer. So it's going to be difficult to gauge that energy, but it's all the same. So this webinar was kind of random because I kind of got the topic in between, but I hope it was clear. I hope everything was understandable. When you're breaking it down, the most important piece is the chart and the candle, right? When you have your chart and you understand how to read a candle perfectly, everything aligns, because now you can see no matter what time frame you're on, you know exactly what's happening for whatever time. Then you know where to apply your skills and your resources and your tools, and you know how long you need to be staying because you know where you have to go. All right. So for quarter one, we're pretty much looking at buys as far as the stock market goes, but not anything significant, not no crazy Forex trade buys. You're going to be able to get buys and they're going to ride it up for probably like a good month and a half, 2 months. So anything that you're getting into right now, have your exit plans already set up, because quarter two is going to have some kind of different setups, because it could sell, it could buy, it's all in what momentum is being made with the US dollar. The way it's looking, though, with the US dollar turning weak, even though the US dollar is still +7, so we know that it's lingering. We know from the 1 hour time frame, the daily time frame and the weekly, that strength is turning. And the US dollar starting to get weak as every other currency is getting strong. So we're now starting to meet it with this. We're going to have buyers and sellers with it, right? So that's all I got. I don't want to ramble too much. Tomorrow is Wednesday, so we'll be back with a stock day. So if you got stocks, we'll look at it for the duration of the month. We'll break everything down for when stocks will be time to get out. Anything that's like approaching getting in. I recommend, like, if you want to see some popular stocks, look on Robinhood, go to the 100 popular stocks or the popular stocks or whatever, and look up some examples and see what's going to be playing out, and we'll go from there. So that's all I got, as I said before, and I'm going to see y'all tomorrow. Peace, love, knowledge, and freedom. I'm out.